Vikas Khemani joins us. Let's talk markets and let's talk about valuations right now. Vikas, morning. Good to have you back. Vikas, if you pick up the Economic Times, there is a tweet from Minister Gadkari, and he talks about that India may revisit the Indus Treaty. How come markets right now have not taken notice of the political move of the current government, and clearly after the unfortunate terrorist attack, there could be a bit of a tension between India and Pakistan. I mean, that's the worst thing markets right now want, but things have started brewing. Do you think investors need to take notice of that?
Hi Nikunj. I think we are in a state of market where we're just coming out of a very big shock to the market, and whenever such kind of loss of confidence or loss of wealth happens, it always takes time to rebuild the faith in the market. And also, let's not forget that we have not had earnings revival in a meaningful manner for a long time. So I think and political situation is such thing which is going to kind of keep changing till actual elections happen. So we have seen even in some of the state elections that it's very hard to predict any kind of outcome, and more importantly, what will be the reaction of the market post that. So I think I don't think market right now is going to take any note of this kind of situation. Probably closer to the election, as in when situation sort of takes place, what kind of formations take place, what kind of mood is there. Based on that, market might make some sort of hypothesis, but currently I think it's too early to make that. And also I think market lacks any significant trigger. So if that is the kind of situation we have right now, unlikely that market would take note. And markets right now are not in the mood to kind of listen to any positive news and reflect that into the valuation. And that determines or shows the psychology of the market right now. And I think it is likely to continue for some more time. Maybe I think depending on the election outcome, if you have a strong government in place, then I think market will again probably resume its confidence and rally back.
But the earnings recovery, Vikas, that will not time itself with the election outcome, right? Do you sense that earnings recovery may happen soon and the market may be able to absorb the election outcome, whichever may it turn out to be, that no one can guess, and in a more steady shape?
So I think if you look at last 3-4 years, every year we have had one or two serious development which impacts the earnings of a corporate level, right? I mean, and last year we have had this whole financial crisis issue led by LFS, and the entire market is right now almost frozen or was frozen and getting better on the credit flow side, and that has created a big impact on the overall earning and the economic activity. So I think as we recover from that, irrespective of election, I think slowly we are recovering from the credit shock, systemic shock we had, and I think you will start seeing that getting better. Earnings this quarter would have been better, in my opinion, if we did not have that kind of shock in the system. And credit shock is always a very big serious shock to economy, because it's a blood of the economic activity. So I would assume that as we move forward, in a couple of quarters down the line, as the stability comes, some of the uncertainty goes behind, economic activity will pick up, and earnings, economic activity is decent. I mean, demand is, I would say, decent, but it will start picking up in a better manner. So I see Q3, Q4 of 19-20 should be much better quarter than any of the immediate quarter. I don't think we should expect even anything in a meaningful manner from a March quarter. It will be better than December quarter, but unlikely that it will be a meaningfully directionally improvement kind of quarter.
Vikas, morning. What's the sense that you're getting when it comes to NBFCs? Because despite the fundamental differences between individual NBFC companies, we are seeing that they're all facing the brunt of the liquidity crunch. It's a shadow that's really looming over the sector as a whole. Do you think that that sort of concern is likely to pass through through this year as well?
I would say that I think after the shock, everybody was treated with the same kind of treatment, whosoever it was. But I think things are getting better. Good NBFCs are getting their liquidity profile right. Also, I think the key problem was asset liability mismatch, which is I think getting corrected. And whatever the cost impact was, I think that will get passed on to the customer. So, once this whole noise and the short-term, pain settles down, I would like to believe that, you will start seeing most of these NBFCs coming back. But mind you, I don't think any of the smaller NBFCs would kind of be able to, make a comeback. Because I think largely, I would say large NBFCs with a good credit rating profile, good management, and in some cases good parentage, I think would be able to get the liability side continuing and better. And those kind of NBFC, and needless to say, a very diversified asset side, without too much of concentration on anything, I think those kind of NBFC will do well, because NBFC does serve a purpose, especially in the current situation where I think our banking sector is, reasonably, I would say, not fully available to the economy. Banking sector definitely, makes a case. So it may not be the case that you might get 30-35% kind of growth which we saw last couple of years, but it will definitely get into 18-20% kind of growth, and business model will sort of continue to do well, in my opinion.
Well, Mark, got to mark ADA's names once again. That's where I think the beta activity has started, whether it is Reliance Power or Suzlon Energy or Reliance Communication. That's where I think there is a bit of an uptick there. Diwan Housing is finally making a comeback. I mean, what a choppy year it's been for Diwan Housing. And then you got Reliance Industries, which is at 1238. Vikas, 6 months ago, 8 months ago, 10 months ago, the favorite theme in the town was HFCs, low cost housing. Buy HFCs, buy companies which are selling bathroom fittings, buy anything which is going to be used in making a house or designing a house. Now, the demand for HFC or demand for housing in India is not going to die. But every HFC has got its own issue. So I'm just trying to understand, for a sector which had a lot of promise, for a sector which could do no wrong, for a sector where NPAs are not there, those are the companies which have now become the black spot.
Absolutely, Nikunj. I think, we had definitely huge amount of sort of euphoria or exuberance got built in the HFC sector given its potential. But at the same time, so that was like excessive got built, and right now as we see, I think it's pendulum has swung completely on the other side. But I think I must say that some of the companies, and which is large companies right now in our questions, whether it is Diwan or India Bull Housing, that has kind of shadowed a lot of good HFC which have had no problem. But I think, if you look at large companies like HDFC, LIC Housing Finance, I think they have been doing very well, they have been growing very well, and they have not had that much kind of cut also or loss of valuation also. So I feel now, you will see again a sort of consolidation. The sector is going to remain, it is going to do very well. In fact, with this current environment, you will get some of the pricing power back. Some of the banks will start growing this segment very well, which I think was sort of drag on them because of the yields. So I think, partly banks will grow this portfolio well, and partly some of the well-capitalized, well-placed HFCs will do well. Smaller HFCs will, find it difficult unless they have a niche which they are operating in. I feel that, rural-focused housing finance in a low-ticket, kind of housing finance likes of Awas and all will do well. Real key lies, I think, in the, again, management, how they manage their growth as well as their risk and ROE, and those kind of companies will definitely do well. So earlier every HFC was considered very good. Now I think that, and which happens in any sort of bull market, and now I think real good quality companies will, I think, go ahead and do well.
From the big picture analysis to specific analysis, in stock markets you have to be stock specific. We both know that this is a market where if you bet on the haystack, you'll not get the haystack right. It is important to look at the sharp needles in the haystack. So in your personal capacity or in your fund capacity, are you finding enough bargains in this market? Are you fully invested? What are your top 3 holdings? The reason I'm asking you all this question is because that is the conversation which we should be having. Discussing NBFCs and discussing macros and election outcome is not going to be any beneficial in this kind of an environment.
I think it's a very good point, Nikunj, and undoubtedly, in my opinion, right now, risk reward of investing into markets has started falling into place. The reward per unit of risk is definitely getting better as compared to 2018, especially in the mid and small cap space. I feel markets are right now treating all companies in mid and small cap space with a similar kind of approach. There are companies, there are businesses, they are not going to be broken. They will be companies which will come back, in whether it is in housing finance, building materials space, even some of the banks. which has been, and some of the NBFCs. And I would believe that I think this is the time to start looking at, those kind of ideas, good management, good business models, and I won't be able to disclose the names and all those things, but I definitely believe the time has come where we start looking at the mid and small cap space and some of the long-term themes. It might happen that in next 2-3 months, given the kind of environment, we might still have some of the disappointments coming through, or some of the volatility coming through in the market. So I would say the approach should be of slow and steady investment rather than getting fully invested right now, and pass through. And from now to, I think, in next 4-5 months, you should be looking to fully invest. And I have said it in the past also, I think this vintage will deliver very good return, probably similar to what we saw from 2014 vintage. Because I continue to believe that India growth story is intact. Macros are right now falling into place. It is just a matter of time that when we start seeing micros also improving.
Okay, Vikas, great to have you on the show as always. Thanks much for taking the time out.